Hi, Greg Dorsey here. It's September 22nd at Leeb.com. Well, the law of unintended consequences has clearly been at work yesterday and today. The Federal Reserve's policy setting open market committee met in what was, without a doubt, one of the most widely anticipated meetings of the central bank's history. And the outcome has been resoundingly greeted with Bronx cheers. The market was expecting and had priced in the Fed's plan to revise a policy known as Operation Twist, which was only used once in the past, back in 1961. The idea behind the policy was for the Fed to sell off a portion of its short-term holdings and use the proceeds to buy long-term bonds in a bid to force down the lower end of the credit spectrum. The hope behind that policy is that lenders, the interest rates that key off of those long-term rates will come down as well. And that will induce consumers to take out more loans and businesses to take out more loans as well. The problem with it, though, is that it's not necessarily going to get lenders to make more loans. And in fact, research has shown that the original Operation Twist really didn't have much of an impact at all, only about 15 basis points. And even that was rather fleeting. You just can't lead a horse to water and make it drink, so to speak. Now, we have seen rates come down, so I guess you could say that the policy is working. But rates have come down not because of the Fed buying more, but because investors are worried about the economy. And certainly the sell-off in stocks the last 2 days is going to make consumers even more nervous and more cautious in making purchase decisions. And again, with the 10-year Treasury yield well below 2% now, and 30-year mortgage rates at 4%, a brief 15, 20 basis point drop in rates is not going to induce consumers to lend or to borrow. And lenders, again, they're keeping a tight rein on the credit quality and are not inclined to make loans at this point. It also didn't help in the Fed's commentary that they used the words that they saw significant downside risks to the economy. We can't recall a time when they've used such wording in their policy statements. We've heard similar things in congressional testimony, but never in the policy statements. And investors were left wondering, well, if Bernanke and the crew saw such risks, why weren't they doing more than this Operation Twist to get the economy moving again? Now, given the bank's outlook and the economic data that's been coming in, chances are we're going to see another round of quantitative easing, but rather than QE3, as people had been expecting, they're going to skip right to QE4. It's going to have to be much larger than might have otherwise had to be. Reaction in the commodities market has been swift and painful. At this point, copper producers such as Freeport Copper and Gold are currently trading as if the metal was selling for less than the marginal cost of production and well below prevailing copper prices. So while we can't rule out additional selling, we think copper shares offer exceptional value if you're willing to take the long-term view. Ditto for gold. We've seen it pull in since the announcement, the Fed's announcement. But that decline really has been related to liquidity issues and people meeting margin calls and selling whatever they can to raise cash. The amount of money that's already in the system and will be injected as a result of what's going on, it just makes rapid, high rising inflation a slam dunk. And on the other end of this, gold and gold stocks are going to do quite well. Short term, however, the gold stocks are going to trade like any other stock. If there's liquidity concerns, they're going to go down. But we would grit our teeth, we'd buy more and ride it out, and we think you'll be well rewarded on the other side for it. Well, boy, that's enough for today, I guess. And well, check back in with us tomorrow. It's Friday, trying to wrap up the week. I'm sure there'll be somewhat of a rally. At least it would make sense that we'd have some sort of short covering heading into the weekend, and we'll see what comes out of Europe over the weekend as well. That's all for now. I'm Greg Dorsey. Thanks for stopping by.